Right now, the crypto market feels quiet. Not crashing, not exploding, just drifting. And that silence is making a lot of people uncomfortable, because when nothing is happening on the surface, the mind starts to fill in the gaps. Traders start guessing, narratives start forming, and patience starts to wear thin. But in markets, quiet is never empty. It's preparation. Bitcoin doesn't move randomly. It moves in phases. And every major move, whether it's a breakout, a breakdown, or a rotation into altcoins, is preceded by a period where the market looks stuck, confusing, and uneventful. This is one of those periods. So in this episode, I want to step back from the noise, step away from predictions, and look at the current state of Bitcoin through a structural lens, not where we hope it goes, not what social media is expecting, but what the market is actually doing. Because the way Bitcoin behaves here doesn't just affect Bitcoin, it sets the conditions for everything else. Altcoins don't move in isolation. They don't lead the cycle, they respond to it. Liquidity flows out of Bitcoin into altcoins. Volatility compresses in Bitcoin and expands elsewhere. Confidence in Bitcoin creates risk appetite. Uncertainty in Bitcoin drains it. So if you want to understand what altcoins are likely to do next, you first need to understand what phase Bitcoin is in right now. Is Bitcoin being accumulated? Is it being distributed? Or is it simply pausing before the next expansion of volatility? Because each of those scenarios creates a completely different environment for altcoins. In the next sections, we're going to break down what the current Bitcoin structure is actually telling us. Why this phase feels frustrating for so many traders, and how this moment quietly shapes whether altcoins get suppressed, ignored, or set up for their next opportunity. This is not about calling tops or bottoms. It's about reading context. This is the current state of Bitcoin and what it really means for altcoins. So, what is the current state of Bitcoin? Right now, we're looking at a daily chart where since the beginning of December, the price has been moving sideways in a broad range, roughly between $80,000 and $96,000. This kind of range-bound, sideways price action is uncomfortable for most traders. There's no clear trend, no strong follow-through, no clean price discovery. And when the market stops giving people clear direction, frustration sets in. That frustration often turns into overtrading, forcing entries, chasing moves that aren't there, making emotional decisions just to feel involved. But this type of market doesn't reward activity. It rewards patience. And patience is one of the most valuable tools any trader can develop in any market. Sometimes the best trade is no trade. Sometimes the correct position is simply to sit on the sidelines, observe, and wait for the market to reveal its next intention. And that is very much the environment we are in right now. A waiting phase, a digestion phase, a patience phase. Now, one thing that can't be ignored is that Bitcoin has already gone through a meaningful correction since the 6th of October, 2025. If we view the market through the lens of the 4-year cycle theory, that date would technically mark the peak of the previous bull market. And if we take historical cycles at face value, that would imply that we have now transitioned into a bear market phase. But markets rarely move in straight lines. And cycles are guides, not guarantees. So the real question becomes, is Bitcoin simply in the early stages of a new bear market? Or is there still room for one more expansion phase one more push higher, and potentially even a new all-time high in 2026? Because the answer to that question changes everything, not just for Bitcoin, but for the entire altcoin market. So from here, we really have two primary scenarios. One, Bitcoin breaks the traditional 4-year cycle structure, regains upside momentum, and goes on to make a new all-time high in 2026. Or two, the cycle structure holds, the range resolves to the downside, and Bitcoin officially transitions into a new bear market, making lower lows into 2026. And depending on which of these paths plays out, the environment for altcoins will look completely different. So in the next section, we're going to walk through both scenarios, what each one would look like structurally, and what each one would likely mean for altcoins and speculative capital. So when we zoom out on Bitcoin and look at the daily chart in more detail, what stands out immediately is the structure of the current range. If we apply a fixed range volume profile starting from November of 2024, covering this entire sideways period, we can see exactly where the market has accepted price and where it has rejected it. Within this range, 3 levels matter most: the value area low, the point of control, and the value area high. Recently, Bitcoin moved back down into this range and successfully reclaimed the value area low. That in itself is an important signal. It tells us that buyers were willing to step in and defend what the market previously considered fair value. From there, price rotated back up into the range and moved toward the point of control. The point of control is the price level where the most volume has traded across the entire range. It is the area of maximum agreement between buyers and sellers. It is the heart of the range. And what did Bitcoin do there? It rejected. That rejection is critical, because the point of control often acts as the pivot between continuation and failure. If Bitcoin is going to resume upside expansion and eventually push toward new all-time highs, it must reclaim this point of control, hold above it, and convert it into support. In simple range theory, once price reclaims the value area low, breaks above the point of control, and holds it as support, the probability increases that price will rotate back toward the value area high. That would be the next major objective. And if at some point price were to reach the value area high, break above it, and then hold that level as support, that is when the conversation about a new all-time high in 2026 becomes structurally valid. Those are the steps. Those are the levels that must be reclaimed. There is no shortcut to that process. However, there is another possibility. If the 4-year cycle theory is playing out cleanly, and the high we made on the 6th of October was indeed the cycle top, then what we are seeing now may not be accumulation at all. It may be distribution. In that scenario, the rejection at the point of control, especially the one we saw around the 14th of January, becomes far more significant. It would suggest that large participants are using the upper part of the range to exit, not to build. And if price fails to reclaim the point of control, rolls over, and then breaks back below the value area low, the picture changes completely. A break below the value area low, followed by a retest from underneath and rejection, would confirm that the range has resolved to the downside. At that point, the range is no longer a base. It becomes a ceiling. And structurally, that would align with the early stages of a new bear market, developing into 2026. So everything now revolves around these range levels: the value area low, the point of control, and eventually the value area high. Whether Bitcoin can reclaim and hold them, or whether it continues to be rejected by them, will determine not just the next move in Bitcoin, but the entire environment for altcoins and speculative risk in the market. So what does the current price action in Bitcoin actually mean for our beloved altcoins moving forward? Let's start by exploring the bullish scenario first. The possibility that Bitcoin goes on to make a new all-time high in 2026. And to understand what that would mean for altcoins, we have to begin with Ethereum. Ethereum is the leader of the altcoin market. It is the benchmark for risk appetite beyond Bitcoin. When Ethereum is strong, altcoins are usually strong. When Ethereum is weak, altcoins almost always struggle. If Bitcoin can reclaim the point of control, hold it as support, and continue rotating higher toward the value area high, that move will lift the entire market in US dollar terms. Liquidity flows downhill from Bitcoin, so if Bitcoin pushes higher, altcoins will rise with it in dollar value, at least initially. And if Bitcoin were to go on and make a new all-time high, the most likely outcome is that Ethereum would also follow and eventually make new all-time highs, along with a handful of other large cap, blue chip altcoins. But there is one critical variable that separates Bitcoin's move from what altcoins experience, and that is Bitcoin dominance. Bitcoin dominance tells us how much of the total crypto market's value is concentrated in Bitcoin relative to everything else. And over the last few years, what we've seen is a slow but steady increase in Bitcoin dominance, with only brief pullbacks along the way. That tells us something important. It tells us that the majority of capital in this market is still choosing the relative safety of Bitcoin over the risk of altcoins. Now, if Bitcoin were to break to a new all-time high, it is very possible that Bitcoin dominance would also break higher, potentially even above the previous high, around 66%. And at first glance, that might sound bearish for altcoins. But historically, this is often the setup for something much larger. Because what tends to happen in late cycle environments is this. Bitcoin leads. Bitcoin makes the headlines. Bitcoin absorbs capital. Bitcoin dominance rises. And then, once Bitcoin reaches a level of saturation, once price goes parabolic and speculative interest peaks, capital begins to rotate, not out of the market, but out of Bitcoin and into higher beta assets. That rotation is what creates what people call an altcoin supercycle. We saw it in 2017. We saw it again in 2021. In both cases, Bitcoin dominance first pushed higher, then rolled over sharply as capital flooded into Ethereum and the broader altcoin market. So if we were to see Bitcoin make a new all-time high in 2026, accompanied by a final push in dominance above the 66% region, and then a sharp rejection and breakdown in dominance, that could mark the beginning of another major altcoin expansion phase. A phase where Ethereum outperforms Bitcoin. A phase where large cap altcoins start trending. And a phase where speculative capital flows aggressively into smaller cap and meme-driven assets. In other words, a true altcoin supercycle. So in the bullish scenario, Bitcoin's strength does not kill altcoins. It delays them. And then eventually it sets the stage for one of their most powerful moves. So what about the bearish case for Bitcoin? What if the 6th of October really was the cycle high? And what we are seeing now is the early stage of a new bear market that carries through into 2026. And if that is the case, what does that mean for the rest of the altcoin market? To answer that, we need to look again at Ethereum. Ethereum is not just another altcoin, it is the leader of the altcoin market. It is the asset that reflects risk appetite beyond Bitcoin. And structurally, what Ethereum is doing right now is concerning. If we look back to the previous cycle, Ethereum made its all-time high in 2021 at the same time Bitcoin made its all-time high. That marked the transition into a year-long bear market. Now, in the current cycle, Ethereum has once again formed a double top structure around that same previous all-time high region. That alone doesn't confirm anything. But when we combine it with volume profile and range theory, the picture becomes much clearer. If we apply a fixed range volume profile from January of 2021 all the way to the present, we can see how Ethereum behaved after the last cycle top. After topping in 2021, price broke below the value area low. It then briefly reclaimed it, consolidated, and ultimately rolled over and broke down again. And what did range theory suggest at that point? That once price re-enters the range and fails to hold above the value area low, the market is likely to rotate toward the opposite side of the range, which is exactly what happened. Now look at the current structure. We again see a double top near the prior all-time high. We again see a break below the value area low. We again see a brief reclaim. And now we are seeing price stall and reject near the upper boundary of that value area low. In range theory, this is not a bullish sign. This suggests that the market is failing to accept higher prices and is being rejected back into the range. And if that rejection holds, the implication is that Ethereum could rotate toward the point of control of this entire range. That move alone would represent a drop of roughly 30 to 40% from current levels. And if the point of control fails to hold, the next destination becomes the value area low of the full range. That would imply a drawdown of as much as 60% or more. In other words, a continuation of a broader bear market structure. And if Ethereum is entering a prolonged bear phase, the rest of the altcoin market will not be spared. Smaller cap altcoins and Memecoins would likely experience even deeper drawdowns as liquidity contracts and risk appetite disappears. In this scenario, 2026 would not be a year of expansion. It would be a year of survival, a year of consolidation, a year of capital preservation, and a year where patience once again becomes the most important skill in the market. So these are the two paths in front of us. A bullish resolution where Bitcoin breaks higher, dominance peaks, and an eventual altcoin supercycle begins. Or a bearish resolution where the cycle high is already in, range structure resolves downward, and both Bitcoin and altcoins enter a prolonged corrective phase. Which one of these scenarios do you think will play out? Leave your thoughts in the comments and let me know how you're reading the market right now. So that brings us to the end of today's episode. Thank you for joining me here on Memes to Markets. I hope this breakdown has helped you see the current structure more clearly and understand what the market is actually doing beneath the surface. If there's one underlying message to take away from this video, it's this: remain patient. And remember that the trend is always your friend. Let the market show its hand. Let structure confirm direction. And allow price to dictate bias, not emotion. There is no need to rush, no need to force trades, no need to guess the outcome. whether Bitcoin resolves higher and sets the stage for another altcoin expansion, or whether the cycle structure holds and we move deeper into a bear market. The correct response is the same. Stay objective, stay disciplined, and let the market come to you. If you'd like to continue learning, make sure to visit memesToMarkets.com. We have a free online course available covering beginner, intermediate, and advanced modules across Bitcoin, altcoin, and Memecoin trading, with a strong focus on market structure, risk management, and cycle awareness. You'll also find affiliate links for Bybit, TradingView, and Axiom Pro, where you can access discounts and reduce your trading and exchange fees, or see the links in the description in this video. Thank you again for watching. This is Memes to Markets, and I'll see you in the next one.